Next question. Mr. A is holding 1000 shares of the face value of rupees 100 each of Messrs. ABC Ltd. So an investor, Mr. A, is holding a certain number of shares of a company which has a face value of 100 rupees. He wants to hold these shares, highlight the portion, for long term. So he has an intention to hold it for a long term purpose and have no intention to sell. So we are going to hold the investment and we are not going to sell it in the shorter period. On January 1st, 2020, Messrs. XYZ Ltd has made, highlight the portion, short sales of Messrs. ABC Ltd shares and approached Mr. A to, highlight further, lend his shares under stock lending scheme with the following terms. So the question is providing the information that there is an investor called Messrs. XYZ Ltd has entered into the sale transaction, and to cover up the short position on the cash market, XYZ Ltd has entered into the stock borrowing scheme. Over here from Mr. A point of view it is lending, and from XYZ Ltd point of view that is borrowing of the stock with the following terms and conditions. Shares to be borrowed for 3 months from January 1st to 31st of March. Lending charges or lending fees will be 1% to be paid every month on the closing price of the stock quoted in the stock exchange. Bank guarantee will be provided as a collateral for the value as on 1st of March 2020. Cost of bank guarantee is 8% per annum. On 29th of February 2020, you have to add this portion. Messrs. ABC Ltd declared dividend of 25%. C. Messrs. ABC Ltd's share is quoted in the stock exchange on the various dates are as follows. On 1st of January 2020, 31st of January 2020, 29th of March 2020 and 31st of March 2020, information is given. Share price in scenario 1. Bullish. Bullish means the price increases. Scenario 2, in that say it is bearish. The second scenario is bearish basically, but the prices are decreasing. You are required to find out earning of Mr. A, that is somebody who lent the stock, through stock lending scheme in both the scenarios. So in both the scenarios, what is income of Mr. A is required to be found. Then second and the third part of the question is required to be calculated. Everybody is requested to go through the question, please. So dear students, over here we understand that say the question is providing the information that Mr. A has lent stock, and for lending of the stock, as per the given information, he is going to get, say, the lending charges which is provided as 1% to be paid every month, say, by the borrower of the stock on the closing price of the stock. So what will happen over here? We understand that say easily it is 1000 into 1%, that is an amount of rupees 10. 1020 into 1%, that comes to 10 rupee 20 paise. And in the last, I'm sorry, 10.20, 10.40 and 10.50. So the total of this three, so that comes to, I think that's a 31 rupees 10 paise. In the first scenario, say Mr. A will be able to earn 31 rupee 10 paise on every one share that Mr. A has lent. As per the given information, that's a 1000 shares have been lent So it is 1000 into 31.1, that is the amount of the earning through stock lending scheme. Since right now we are talking about the earning through the stock lending scheme, that is the reason say the B information over here say regarding the dividend is ignored, and we will be considering say only the income that say Mr. A will receive say on the lending of the stock. In the second case also it will be very simple. It is 980 into 1%, that comes to 9 rupee 80 paise, 9 rupee 60 paise and 9 rupee 40 paise. That is the way we are going to compute so the amount of earning to Mr. A on lending of the stock. So write down answer of the question. Answer for the first question. In order to calculate income of Mr. A on lending of stock, comma, we will compute amount of financial charges received by Mr. A on lending of stock. Full stop. So write down answer further. Scenario 1, scenario 2, income that is date is 31st of January 2020, 29th of February 2020 and 31st of March 2020. In the first case it is 10.2, 10.4 and 10.5. 10.2, 10.4, 10.5. So 1020 into 1%. 1040 into 1% once again. 1050 into 1%. That is the way it comes to 31 rupee 10 paise. In the next case it is 9.8, 9.6, 9.4. So 9.8 plus 9.6 plus 9.4, that comes to 28.8. That is the amount of the income per share so based on that we'll compute the total income. It is 31.10 into 1000 shares. $28.80 into again 1000 shares. This is the way the total income will be calculated. Second part of the question is total earning of Mr. A during 1st of January to 31st of March in both the scenarios. So we understand that the Mr. A will be able to receive the lending charges, and over and above that say he will receive the dividend also. The rate of dividend is provided as 25% and face value is given as 25. So 100 into 25% is 25 rupees is the dividend plus the amount received on lending of the stock. That is the way the total income will be calculated. Right an answer? Calculation of total income of Mr. A. So scenario 1 and scenario 2. Income on lending of stock in the first scenario it is 31,100. In the second scenario it is 28,800. Add dividend income. It is 100 into 25%, that comes to 25 rupees into 1000 shares. That is the way the total income can be calculated. So that comes to an amount of 25,000. So total income in the first case will be 56,100 and in second case it will be 53,800. That is the way the income will be calculated. Importantly, we understand that as far as Mr. A is concerned, he is a long-term investor and he does not have an intention to sell his investment in the short run. That is the reason, say, we will not take into account the change of the price in order to compute the return to Mr. A. Third part of the question is again important. What is the profit or loss to Messrs XYZ Limited? That is, say, who raised the or who did the short position on the cash market. Of course, he would be having an expectation that, say, the price of the security will fall down. So we are required to find the profit or loss to XYZ Limited by shorting the shares through stock lending scheme in a way that, say, he squared off the position, say, by way of borrowing of the stock, and he borrowed that is, say, the company borrowed the stock for a time period of 3 months in both the scenarios. I want you to calculate answer of this question on your own, then I will do working for you. So giving explanation to you that, say, how to make the calculation of answer in the first scenario, then I would like you to do answer in the second scenario. Understand language of the question carefully. It has been provided to us that, say, Mr. A holding this number of shares having face value of 100. He wants to hold the shares in the long term and have no intention to sell. On 1st of January, Messrs XYZ Limited has made short sales of Messrs AB Limited shares and approached A Limited to lend his shares under the stock lending scheme. We assume that, say, the transaction is entered upon for 1000 shares. So 1000 is the price at which you have entered into the transaction to sell. In the first scenario, what will happen? In a simple way, we understand that, say, 1050 is the price at which you have to buy the share. So basically, there is a loss of 50 rupees that you have to incur due to change in the price of the security. You have to make the payment of the lending charges. In the first case, we already have calculated that, say, you are required to pay the lending charges of 31.10. So that is going to increase your loss. So 31.10. In addition to that, say you are required to make the payment of the bank guarantee charges, because what happens at say basically, so the lender wants an assurance that say you will not default in refunding of the stock. So you have submitted a bank guarantee which has a cost of 8% per annum. So again the language of the question is very clear, so it is 8% and it is on per annum basis. So 1000 into 8%, that comes to an amount of 80 rupees I think. So 1000 into 8%, that comes to 80 rupees. However, you have obtained the that is bank guarantee only for a time period of 3 months. So into 3 by 12, that is into 0.25, so it comes to 20 rupees. So 50 rupees is the loss due to increase in the price, 31.10 is the lending charges, and 20 rupees is the bank charges. So 50 plus 31.1 plus 20, that comes to 101.10. This is the loss that you have on one share. Multiplying with 1000 shares, that is going to give you so the total loss in the first scenario. And in addition to that, so there will be payment of the dividend, that is an amount of 25 rupees. That is the way the loss will be calculated. So write down answer for the third question. Calculation of profit or loss to Messrs XYZ Ltd. Scenario 1 and scenario 2. Payment of charges 31.1 and in the second case it is 28.8. Payment of dividend it is an amount of rupees 25. 100 into 25%. Bank guarantee charges 1000 rupees is the price into 8% into 3 divided by 12, that comes to an amount of rupees 20. And lastly, change in price of security. In the first case, what will happen? The price of the security has gone up. It is 1050. So what will happen? It is 1000 minus 1050. There is a loss of 50 rupees per share. In the second case, it is again 1000 minus 940. So there is a profit of 60 rupees per share. This is the way overall profit or loss can be calculated on per share basis. And lastly, in total profit or loss, that is profit or loss on per share into 1000 number of shares. This is the way we are required to find answer. So what is the profit or loss per share in the first case? What is the profit or loss in the first case, friends? Sorry? 126.1. So overall loss is 1,26,100. That is 126.1 into how many shares? 1000 shares. In the second case, so what is the amount of the profit or loss? Sorry? 13.8. Profit or loss? Loss. Again loss. In spite of the fact that say the prices have changed in favor, yet say the dividend and the landing charges have are of such amount that say ultimately we are incurring loss. I think it is 13,800. Okay. So just summarizing the entire question once again before we proceed further. As per the given information, there is an investor called XYZ Limited. XYZ Limited is name of the investor, which has entered into the transaction for sale of security A transaction. Sale of security ABC Limited transaction, to whom is not provided to us in the question. Let us introduce a name, PQR Limited. So XYZ Limited has entered into the transaction for sale, PQR Limited has entered into the transaction for purchase. What is the price at which the transaction is entered upon? It is 1000. What is the number of shares for which the transaction is entered upon? It is again 1000. So this is the way the transaction has taken place on 1st of January. Whether Messrs XYZ Limited has shares of ABC Limited, the answer is no. So basically XYZ Limited is having a short position on the cash market. Now what XYZ Limited is doing? XYZ Limited is entering into the transaction for borrowing of the stock. XYZ Limited is entering into the transaction for borrowing of the stock. Stocks of ABC Limited is borrowed and say the short position is squared off. Stock is borrowed from a person called Mr. A, and this time very good information is provided to us regarding the lending charges. On 29th of February, when the dividend is declared, at that time neither Mr. A is receiving dividend nor XYZ Limited is receiving dividend, but it will be received by PQR Limited, assuming that say for 2 months that PQR Limited is holding the shares, and if at all he sold those shares further, then in that case somebody else will receive. We are not concerned with that. On 31st of March, when XYZ Limited is refunding the stock, at that time not only stock is required to be refunded, but also the dividend income which Mr. A could have received is required to be compensated along with the borrowing charges. So from XYZ Limited point of view, payment of the borrowing charges is a cost. Dividend that say Mr. A could have received is required to be compensated, so that is again a cost. If at all the price has increased, then in that case there is again a loss equal to the difference between say the price at which the security was sold and the price at which now you are required to buy the security. That is over here say 50 rupees, and one more thing, that say the bank guarantee charges is required to be paid. In a way that say we understand that say the bank will give an assurance say in the entire process on behalf of XYZ Limited that if at all XYZ Limited does not refund the stock, we are going to say refund the stock to you. So this is the way we are required to make the computation of the overall profit or loss in both the scenarios. So finally a small summary of the entire answer. In the first part of the question speaks that you are required to compute only the lending charges which Mr. A is going to receive. It is simply the closing prices into 1%. That is the amount of the lending charges that say he is going to receive. On per share it is 31.1 in the first case and 28.8 in the second case, and with that the total income is calculated. Second question says that say what is the total income of Mr. A? That is the lending charges plus dividend income which he has forgone must be compensated by the lender of the borrower of the security at the time of refunding of the stock. Lastly, profit or loss to XYZ Limited, that is say the trader who has entered into the transaction for sale, and this is the most important part of the question in my opinion. In that say one, there is a payment of the charges, second is the payment of the equity dividend which the lender could have received, payment of the bank charges. These three things are going to be there in both the cases, and then the closing prices say might have changed in favor to you or that might change, say, the reverse to you. If the price is declining, then in that case it is favorable to you by rupees 60, and if at all the price is increasing, then again it is unfavorable, and accordingly the total profit or loss is calculated.